Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Wednesday, Hump Day, November 21st, day before Thanksgiving. So we got a nice long weekend coming up here, and we won't be seeing you until Monday of next week. So we'll jump right into it. We do got some economic news ones scheduled for today, and starting with the weekly jobs claims. Normally these are on Thursday, but being holiday yesterday, they're bringing up a day. So last week we had actual revision of up to 451,000 people applying for unemployment last week. Again, a lot of this is being blamed on Hurricane Sandy as a result of Hurricane Sandy. Uh, they projected about 418 and it came in about 410. So still over 400,000 people applying for unemployment. Obviously not a good sign. We hadn't seen really those numbers since last year. This year's been pretty good about that. It's been averaging in the threes, mid threes. Then we got the market flash PMI for the month of November. We had a 51-point rating last month, October, and we figured tamer down a little bit, about 50.8, and it came up and went revised higher. So some decent numbers there. And then we got the consumer sentiment for the month of November. This is the final reading here, because remember we have one in the beginning of the month for initial reading and then final. So the initial month reading we had was 84.9. Back at last October, the final reading over there was 82.6. So we figured the final reading would be right around 84, and it came in a little shy. So slightly better than October, but not quite to what we expected. It came in at 82.7 over here. So not the greatest. People are still feeling a little bit better, apparently, and we'll see. Now let's jump over to the headline news here. The stock market's up a little bit today. We could expect some volatility here, primarily because the hedge fund managers, a lot of those guys usually take today off or at their homes in Hampton to celebrate early of Thanksgiving. So we got more of the day traders that are going to affect the markets today. The Greek minister, the European ministers over there decided to wait until Monday to decide how they're going to come out with the bailout funds. This is not a very good time because basically Greece basically said they're going to be broke this week and not going to be able to make any of their payments this week if they don't have any money. So this could create some problems over this long weekend here. And then Bernanke, as I mentioned yesterday, he was speaking in New York to investors. Basically, now he's saying the rates will probably remain near zero until mid-2015 here now. It's kept changing as from 2013, 14. Now we're hearing 2015. He's seeing some bumps in the road where we could have very slowdown in growth here with the GDP and everything. And basically, he's also encouraging Congress to hurry up and get this fiscal cliff taken care of. As the longer we prolong it, the more damaging it is to the markets. So he's encouraging them to get that taken care of and not to be toying also with the debt ceiling that we have issues as we're about ready to hit that new debt ceiling that we created last year when we increased it. And basically what they're saying is that they could manipulate the numbers with accounting numbers for a few months, but the inevitable will basically come down to it'll start exceeding it, and that's obviously not tolerable. So they need to get that under control. All right, so let's go ahead and take a look at the bond market, see what's going on over here. All right, so it looks like we're going in a little downward trend here. As you see, the arrows coming down here. We had a huge decline yesterday, dropped quite a bit. Pulled back quite a bit, or basically looks like it was kind of going through another correction before we'll probably make another run upwards. A lot of forecasters out there are kind of projecting we could hit probably the 106 level of the market, right? But right now we're at about 104.63 for the day, so we're down about 3 basis points from yesterday. We do have a floor of support right around the 104.40-ish range, so we could lose a little bit more where rates will go up a little bit more before we improve. So right now, short term, looks like we could have some problems with the interest rates where rates could be climbing up a little bit before they'll get a little bit better. All right, folks, you guys have a wonderful long weekend here. I will see you guys on Monday. And if you guys, thanks again for stopping by. And if you guys like these reports, just stop on by over at mikesdailymarketreport.com and subscribe. You'll have these emailed free for you on a daily basis. Have a great day.